let's have a look at what we are going to be doing today. Let me just find my slides. Right, okay then. So first of all then, just a little bit of an introduction about me. So my name is Hannah Campbell. So I'm a tutor here at FI and also I look after our online programmes as well. So helping to make them better and sort of training people on how to use this platform, which is known as Adobe Connect. As you can probably tell from my accent, as much as I try to hide it, I am from the Birmingham area of the UK. And so I always like to, at the beginning of my session, there are 26 of you online this afternoon. So I always like to ask, whereabouts are you logging in from today? So if you want to pop your answers in the chat box, the polls are completely anonymous, so only I can see who has said what. But it's always nice to sort of get a good sort of visual of where everybody is this afternoon, wherever you are. I hope the sun is shining for you guys as well. So excellent. So we've got a lot from London, a lot down south to me, Berkshire, Essex, London. We've got some in Ireland, absolutely fantastic. I've never been to Ireland, but I always would really love to go. We've got Norwich, which is to the east. I'm testing my geography skills now. Excellent. Cambridge, York. Oh, good. We have got somebody sort of up north to me, which is brilliant. Excellent. A real good sort of spread across the UK, and no one anywhere exotic, which will make me super jealous. Right then, so I have been teaching management accounting for the past 10 years. I started off teaching ACCA F2 and ACCA F5 as they were called, or MA and PM in their sort of new names. So I have been teaching variances pretty much every year for the past 10 years. Okay, so hopefully I can offer you some words of advice and help you to better understand your variances as well. So I've got a couple of introduction questions for you, just to give me a better understanding of who we have got in the room. I probably know the answer to this one, but you should be able to see a poll in the middle of your screen, which enables you to tell me which paper you are currently studying. And also there is another poll that I would like to know: when do you plan to sit your exam? Obviously with CIMA and AAT, there's no prescribed exam sittings, but would be really useful for me to know sort of what you're studying and when you plan to take your exams. Excellent. So we've got a lot of PM students in the room, and then a couple of MA and AAT students. Fantastic. And budgeting students. Brilliant. Yeah, AAT, I think they're starting to offer those exams from home, so they've just sort of released that information within the last week or so, which is great news. Some of you taking the new July exams at home to test it all out, so absolutely fantastic. Hope that goes well. And then obviously the rest of us sort of aiming for the September sitting of ACCA. Fantastic. So yeah, I guess we are going to definitely have a look at sort of ACCA PM. I've got a specific question that I'd like to look at, but I guess in terms of the session, we will be looking at basic variances. Okay, so all the variances that are first introduced to you at something like F2 or CIMA BA2 or AAT. Both of those management accounting papers at level 4, that's when variances are first introduced to you. But obviously in PM you have more advanced variances, which is what the majority of questions are always going to be about. But in order to be good and to be able to answer those advanced variances, you need to have a really good knowledge of your basic variances. And of course at PM level, the problem is it is assumed knowledge, okay? So we don't have time to go through the basic variances in a lot of detail because the main focus of the exam will be on those advanced variances. But for example, in order to calculate operational variances and planning variances, you need to know how to calculate the basic variances, because the advanced variances are obviously an adaptation of those basic variances. Okay, so really important. We're not going to cover the advanced variances today, but really important that you understand the basics to be better at the more advanced questions. Brilliant. Thank you very much for answering that. So I'll just hide those polls. So another quick question for you before we get started. Have you studied with First Intuition before? Okay, so do you know about First Intuition? And also my starting question, I'm going to ask you exactly the same question at the end of the session, is how would you rate yourself in confidence on basic variances? So on a scale of 1 to 10, where 10 is feeling super confident, you love basic variances, you can do them in your sleep, and 1 being I have absolutely no idea where to start or what to do, I can't remember them. We have massive problems with our basic variances. Okay, let's have a look. So brilliant, we've got pretty much sort of half of you at sort of 5, sort of midway, feel okay, maybe not the strongest, or slightly less than that. Okay, so hopefully I'll ask the same question at the end of the session. Hopefully you might start to feel that confidence has improved, okay, over the next hour, or actually will start to improve once you've taken on board some of the things that have been covered during this session. Okay, excellent. Thank you very much for answering those questions. So to give you a bit of an outline of today's session then, if I can get my slides to move along, is first of all, I'm going to ask you in a second, what is it that makes it difficult? What is it that you find difficult about those variance questions? And then we're going to break it down. So we're going to start off with, where do these variances come from? Okay, why are they calculated in the way that they are? You know, how can we build them up so that if we, you know, don't want to learn lots of formulas, or we don't want to learn lots of proformas, if we understand what this variance is trying to do, could we then replicate that and calculate it in the exam? Now, with some questions, the information that you get is in paragraphs, okay, so it is in continuous text, and I think that sometimes throws us off because we don't understand perhaps some of the terminology around variances. So I've got a bit of a glossary to hopefully help us with being able to locate the right information within the scenario. I'm then going to talk about, well, how do you go about sort of remembering all of these variances? It's okay for me because I've been teaching them for 10 years. So I've been saying them over and over and over again for 10 years, okay? But unfortunately, you haven't got 10 years before your exam. So how do you go about remembering and learning these variances? We're then going to do some hi Silverline. We are then going to have a look at some example questions. So I've got an ACCA question, and then I've also got some CIMA shorter questions, although these would absolutely apply to ACCA as well, because you could get some objective test questions in your PM paper in section A or section B, shorter style questions just like you would get in CIMA. And then we're going to talk about backwards variances, because sometimes it might be that you need to find a piece of information that's within the variance formula or the variance proforma. So how do we go about answering the question when it's not actually the variance that we are being asked to calculate? Okay, and then hopefully by the end we'll have a bit of time for some questions as well. Everything that I am going to talk about and go through is available. There we go. I can't do it. There we go. Is available in this pod here next to the webcam. So you've got the slides in there. You've got the questions that I'm going to go through. And also I've put together just a big list of the variances. So you've all got them in one sheet that you could pin on your wall and start to learn them. Okay. Now the session is being recorded, and at the end of the session, we will be sending out the recording, And all of these things that are available to download, you can download from the recording. So if you don't manage to download them today and you want them afterwards, then you'll be able to access all of that from the recording. Okay, excellent. Okay then, so let's get cracking with our basic variances. So the first thing that I wanted to try is something that I have not done before, so I'm hoping this is going to work. Is I'm going to take you to this screen here where, let me just click on this. So it's a whiteboard, and you guys should be able to click on the T. There should be a bit of a sort of a menu there. You should be able to click on the T, and you should be able to either, well, you can draw, I think, or you can click on the T and you can type in some text, okay, and it'll appear somewhere. You can type it in. Give me a green tick if that is working for everybody. I think you have to then press enter at the end. Good, thank you, Charlie. Oh, brilliant. I can see some dots and I can see some text on my screen. So I am going to give you a few minutes to just put what you find most difficult about your variances. I'm just going to delete some of these things that we don't want on there. Oh, I think I might have accidentally deleted somebody's thing there. Excellent. Okay. Brilliant. So, am I able to move these? I thought I might be able to move them. Oh, I can move them. There we go. Let's just spread these out whilst you're still typing them in. Let's delete that one, and that one, and that one. Fabulous. Oh, I quite like this. I've never used it before, but I like it. Let's put that over there. Some of these dots. Oh. Not sure if there's... Ah, fabulous. I think you're deleting them now. Brilliant. Excellent, good. I quite like that whiteboard. I definitely might use it again. I can't believe it's taken me this long to use it before. Right then, so let's have a look. So they're all very similar. Fantastic. Yeah, I think they are all very similar, which, you know, the good point of that is it could make it easier to learn. But perhaps then we get confused about sort of which variances we should be using. So again, hopefully my glossary of terms and my Proforma sheet will help you with that. Actual things to look out for when calculating variances, how to remember them all, what they're looking for in the answer. Yeah, just generally just find them a bit difficult. I think you're not on your own. Most students absolutely do. Oh, there we go. Oh my goodness, I thought it had disappeared then. How to figure out exactly what's being asked. Yield variance, yeah, so that's one of the more advanced variances, which obviously we're not going to do today, but hopefully, you know, once you've understood the basics, then it might help you with those yield variances. What you're actually using them for. Variable overhead variances. The good thing about variable overhead is they are very much like labour variances. In fact, they're pretty much exactly the same apart from the rate that we use. So hopefully the sort of discussion around labour variances will help. Yeah, the amount to do, there's just quite a lot of variances, you know, sort of quite hard going, maybe quite time consuming. Remembering them and the written questions on sort of formulas and budgets, or written questions around sort of variances. So interpreting the information that you've got and where to start with the information. Fantastic, that's really useful to know, and hopefully the things that we'll talk about today will definitely help you with those areas. Okay then, so let's start off here. And let me just share my screen. It seems to have stopped sharing. There we go. Right. Okay then, so first of all then, what we're going to do is we're going to look about the background of variances. So why do we calculate them? How are they where do they originate from? What are we actually trying to do? Where do they come from? So a basic variance then will always begin with what we call a flexed budget, okay? So this is really important to variances. So it's really important we can define what a flexed budget is. So I'm going to pop this poll here. Can anybody tell me what we mean by a flexed budget? How do we calculate it? How would you define it? What is a flexed budget? So there should be a poll on your screen. Good, I like the honesty in this poll. Fabulous, good, we are off to a flying start. So yes, a flexed budget is absolutely a recalculation of the budget, but based on our actual units, okay, the actual units that we've sold or the actual units that we have produced. If we didn't do this, we would be comparing a budget which could be based on 1,000 units compared to actual information which could be 2,000 units. Now, when we calculate the variance, we don't know if it's because of our actual performance or simply just because we have, produced more or less than what we budgeted for. So what we do is we always make sure that when we compare our actual information, we are comparing it to a budget that is based on actual units. So we can never say that a variance is because we have produced more, okay? The number of units is different. So, fantastic start, because that is how we build up variances, is we compare our flex budget to our actual. So flex budget versus actual is your basic variance, okay? Now that flex budget, as we've just talked about, is our actual units, either produced or sold, depending on your variance, and we multiply by the standard cost per unit. So this word standard, think of it as should, okay? So when we talk about variances, we very often talk about what we should have done compared to what we did do. So always think the word standard, it begins with an S, refers to what we should have done for what we have actually produced, okay? Now, in terms of our flex budget and actual, as we've said, it's always actual units in a flex budget multiplied by the standard cost per unit, and this is what should have happened for what we actually produced or sold. Actual is just the actual units, so it's staying the same, so units is never an explanation for a variance. Actual units multiplied by an actual cost per unit. It's what did actually happen, okay? So in terms of that budgeted standard cost, we can find it in a standard cost card. And a standard cost per unit is made up of a standard quantity, so things like kilograms or hours, and a standard price, or it might be referred to as a rate if we are looking at labour. So our actual production units is our flex budget multiplied by the standard quantity per unit, so kilograms or hours, multiplied by the standard priced per kilogram, okay, or per hour. So we're taking the flex budget now and we're breaking it up even further, because that standard cost per unit that we use in a flex budget can be broken down into quantity and price. Now, by breaking it down, this allows us to figure out why we've got the variance. Is it because of efficiency reasons? So we're looking at the quantity, or is it because of the price that we've paid? Maybe we didn't negotiate very well. But if we don't break the variance up, we only have a very sort of basic understanding of how we've performed as a business. What we want to try and understand is, where is the problem? Is it to do with our efficiency and our production processes or our staff? Or is it because of our purchasing and the suppliers and our negotiation skills? So we can break it down, get a better understanding, which means in the future we can improve our performance. So how do we arrive at a quantity variance and a price variance? How do we take this total variance and break it down to further understand our performance? So what you're seeing on screen here is your flexed budget versus your actual. Now, this is always referred to as our total variance. So if ever you are asked to calculate a total material variance or a total labour variance, they simply want you to look at the flexed budget of material versus the actual cost of material. Okay, so as we saw, flex budget is always actual units multiplied by the standard cost, broken up into quantity and price. Actual cost can be broken up into actual units, actual quantity, and actual price. Okay, so this is your total variance. But what we want to do is better understand our performance. So we're going to break this up into a variance that just looks at our quantity and just looks at our price. Now, in order to do this, we need a middle line. Okay, so what we are going to do is we're going to take that flex budget into the next line, but we're just going to change one thing. So I've decided to change quantity. Okay, so I've changed that middle part of the flex budget into actual quantity. Now, what this enables me to do is compare the top two lines, the bottom two lines, and break up the variance to understand where I've gone wrong or what I've done right. So quantity variance is where we would have a look at the top two lines. If we look at those top two lines, the only thing that is different between them is that middle box, that quantity. So if that middle box is different, that is what we are examining. We are looking at the standard quantity compared to the actual quantity. So what we should have used compared to what we did use. Now, the quantity variance can be referred to as a usage variance if you're looking at materials, and it could also be referred to as an efficiency variance if you're looking at labour, or if you're looking at variable overheads, and also if you're looking at fixed overheads. Okay. Now, the price variance then would be if we looked at the bottom two lines. So the bottom two lines, the only thing that is different are those end boxes, because actual units and actual quantity is in both of those lines. So the price is different. We are comparing what we should have paid, the standard price, compared to what we actually paid, the actual price. So does that help in understanding how we come up with these variances, where they've come from, and why they're calculated in the way that they are? Give me a green tick if that has helped. Now, obviously, there are a lot of variances and there are a lot of formulas or proformas that you need to learn. But if you understand this, you should be able to calculate most of the variances that you are being asked in the exam. Yes, you absolutely can. Andrea, they are available in the download box. You'll get the recording link, but in the recording you can still download the slides as well. But what I'll also do is I'll attach the slides to the email just to make sure you've definitely got these slides, okay? So if you understand how a variance works, what we are trying to do, I'm hoping that will then help you if you're in the exam and you're really stuck and your mind goes blank. Go back to basics. What is a variance? What are we trying to do? What are we comparing? How can I take this overall total variance and split it into quantity and split it into price? Okay, fantastic news. Brilliant. So I thought what might help you as well is a glossary of terms. So I'm not going to go through every one. As I said, you will have these slides, but hopefully this will help you to think about the words that are being used in the variances, and sort of that will then help you to locate the information within the scenario. Okay. Now remember, obviously with management accounting questions, they're not always the same. They are slightly different. So sometimes in a question, you might be given the actual total material cost. In another question, you might be given the actual quantity of material that you've used and the actual price that you've paid, in which case you're going to have to multiply them together in order to find your total actual cost, okay? But obviously, the more questions that you do, the more you're going to see all of these different ways that the question might give you an information, and that is how you are going to learn, and that's how you're going to remember to locate the right information in the exam, okay? Practice of these variants is key. Now, I've spent 10 years doing these variances. However, I can remember when I first started teaching, even though I'd done a degree in accounting and I'd seen all these variances before, it was like brand new information to me because I just didn't remember them. So repetition is really important. If you keep repeating things, they will automatically stay in your head. Okay, so lots and lots of question practice. Now, the other thing that we've not mentioned is whether a variance is adverse or favourable, which sometimes can cause us a few problems in the exam as well. So I've put it into quite simple terms here. Adverse variance, it's different with cost and sales, so it's always the opposite for cost and sales. So for cost variance, it's when your actual result is more than the flexed budget. You've actually spent more than you should have done, which obviously in cost terms is bad news. For sales variance, this time if your actual result is less than the flex budget, you've got in less revenue, you've made less profit, bad news, so it is adverse. When we talk about adverse and favourable, we're always talking about the effect on profit. So if what has happened has caused your profit to decrease, then it would be an adverse variance. Similarly with favourable, for cost variance, if you spent less than what you should have done, that's going to increase your profit, good news. For your sales variances, if you've sold more units or you've got people to pay a higher price and you've got more revenue, that is good news for your profit because you've got more money coming in. So it's a nice little summary there to remember what we mean by adverse or favourable, but always think about the effect on your profits. So how do you remember and how do you learn all of this? Okay, now I'm going to show you my little Proforma sheet in just a second, which is available to you to download. However, every time you do a question, okay, now obviously the more you do, the quicker you will get at doing this, but every time you do a question, write out the words of what you're trying to calculate. Actual quantity multiplied by actual price multiplied by actual units, okay? Write out the words because that will then focus your mind as to what information you've got to go and find in the scenario, but also writing it out lots and lots of times, similar to saying it lots and lots of times, is repetition, and it will help you to remember and learn those pro forma. Write them out. I've done that for you because I've got a nice handy sheet with all of the variances on there. Pin them up on your wall, put them on post-it notes. I used to have post-it notes all over my walls and doors when I was a student. Every time somebody came into my room, I'd be like, test me on one of those post-it notes. Get your friends and family involved. Share the pain with them as well. Focus on understanding. So really understand what a variance it is, how we're trying to calculate it, how we calculate those variances, and it should always help you to remember how to calculate them. Now, in terms of the approach that you use, some people and even some tutors prefer to use the should versus did. Okay, so they think about what they're trying to calculate. How much should I have used? Work. Is that better, guys? Can you see and hear me okay now and see the screen? Brilliant. I'm sorry about that. Don't know what happened. Just a little blip in Adobe, which yeah, is happening less these days, but it was pretty full on when lockdown started and everybody was using it. Brilliant. So as I was just saying, whatever works for you, the should versus did way of thinking about things, or learning the formulas, whatever works for you. I'm a bit of a formula person, so that's what I prefer, but you know, not everybody is the same, so do whatever works for you. Okay, brilliant. So we're going to do some examples of questions now. Oh, practice, that's another important one, but we've already spoke about that. So we're going to do some example questions, but just before we do that, let me just show you my variance pro forma sheet. Okay, so here what I've done is I've used abbreviations, but I've explained what they mean, and sort of I've wrote them out in full. Again, I'll attach this to the email that we send out to you, and it's also available to download from the recording. So all of the variances are on here. So price variance, usage variance for material, labour variances, so we've got the labour rate variance, a labour efficiency variance, and an idle time variance. And then we've got the same for variable overhead variances, which is basically exactly the same as your labour variances. It's just the rate you use is variable overhead and not your labour rate per hour. And then there are your fixed overhead variances, but at PM level, they tend to be tested less. The AAT and anybody that's doing management accounting or P1, they might be examined a bit more frequently, but by the time you get to PM, we don't focus too much on fixed overhead variances. Fantastic. So hopefully you find that useful, okay? But really understand what it is you are trying to calculate, and that will definitely help. What I'm going to do now is go through questions so we can focus on the problems that we talked about at the beginning of the session of not knowing sort of where to start or finding the right information out of the scenario. Now, first of all, let's start off with a PM question. Okay, so this question is from December 2012 and it's called Truffle Company. Now, in terms of your question, sometimes, depending on your qualification, depending on your paper, sometimes they will set out the information differently. So sometimes you might get a standard cost card, which is usually always at the top of the scenario, and your actual information listed at the bottom of the scenario. Okay, so it's a bit more like an income statement, balance sheet type of format where you get a cost card and you get your actual information. Okay. However, in some questions, and particularly in the short questions like in CIMA P1 or your BA2s or your management accountings or your AAT, the question is in words, it's in paragraphs, okay, which makes it a little bit harder to locate the information. Now, obviously, we're going to be doing these exams on the computer, okay, and in the remote exam world, it's not always possible to jot things down, okay, so you're going to have to get used to perhaps typing things up on a scratch pad, okay, so a piece of sort of scrap paper on your computer screen where you can type out your workings. Now, what I would suggest you do is you either use different coloured highlighters, which I think you can do on your exam screen. You can highlight your exam paper. I would highlight everything that is actual information in one colour and everything that is standard information in another colour. The alternative is type it out, okay? So actual, whatever it is, actual price, type it out. Actual quantity, type it out. Standard quantity. So you've got a list of all the information that you need if you prefer to work in lists rather than reading in continuous text. So just a couple of things to perhaps help locate the right information. And what you want is to have that information quick, okay? So you want to be able to access it quickly for when you come to do your actual calculation of the variances. So let me have a look at this pen. Right then, so this is a 20-mark question from PM, section C question. But in this question, I've picked this question because part A of this question for 4 marks is to calculate basic variances. Now, you would actually need those basic variance formulas also to do your operational and planning variances, which is part B. But we're just going to focus on part A. We need to nail the basics so we get good at the advanced questions, which are obviously always going to be worth more marks. So let's have a look at part A. So it has asked us to calculate the total labour rate variance and the total labour efficiency variance based on the standard cost provided above. So if we have a look, all of the information we need is actually in paragraph 1. Okay, so we are looking for the words standard and actual. We're looking for the words price or cost or quantity or hours if we are dealing with labour. Okay, so we've got Truffle Company makes high quality handmade chocolate truffles which it sells to a local retailer. All chocolates are made in batches of 16 to fit the standard boxes supplied by the retailer. The standard cost of labour for each batch is $6. Okay. Now, when we talk about standard cost, we're not talking about quantity. We're not talking about price, we're talking about cost, which is made up of quantity and price. So when we talk about standard cost, that would be the standard hours per batch multiplied by the standard rate per hour. Okay, so we know that this standard cost equals 6. Okay, so on your scratch pad, you could be typing this out, okay, and really understanding the information that you've been given. Now, it then tells us that the standard labour time, so we're talking about hours here, time, for each batch is half an hour. So that is the standard hours per batch, which is what we need here. So this is always per batch or per unit. So we know that half an hour is the standard hours per batch. So if $6 is the cost and half an hour is the standard hours, fastest finger first in the chat box, what must be the standard rate per hour that we are paying these workers? Absolutely fantastic. Well done, Quaddus. I think you were the first one there. So, oh, I've put dollars. It's not dollars, is it? Oh, it is. Has it gone? There we go. $12 per hour. Okay, and this is half an hour. Okay, so we've got all the standard information that we need. So it then says, in November, Truffle Company had budgeted production of 24,000 batches. Well, we're not interested in budgeted batches because we always want a flex budget, which is always actual units or batches. So we're not interested in that information, but we are interested in the next bit of information. So if you're using the highlighting method, you can now highlight all this information in a different colour. So actual production was 20,500 batches. 12,000 labour hours were used to complete the work, and there was no idle time, which means the hours that we worked were the hours that were paid. The actual total labour cost for November was 136,800. Okay, so we've not been given actual rate per hour, we've just been given the actual total labour cost, which is made up of those 12,000 hours multiplied by the actual rate that we've paid. Okay, so if you were using the other method, in terms of writing everything down, you'd write your actual information. So you've got 2,500 batches, you've got your 12,000 hours, okay, and you've got your 136,800 costs, okay, and you could write it down, actual batches, actual hours, actual cost, okay. So when you've got all of the information squeezed into one paragraph, okay, and you might look at something wrong, separate it out, either highlight it in different colours or write it out so you've got all the information that you need, okay. So first of all then, let's have a look at our total labour rate variance. Now our labour rate variance, okay, what we're looking at is for the hours that we actually worked, what should we have paid those staff and what did we pay those staff, okay. So if we're looking at labour rates, it's the rate that is changing, which is always per hour, so it needs to be multiplied by a number of hours, okay. So remember, the word should means standard, okay. So our actual hours, okay, that we have paid our staff multiplied by the standard rate per hour compared to our actual hours paid multiplied by our actual rate. Okay, now you could even break down that actual hours into actual batches and the rate per hour. But as we've just been given the actual hours in the question, we don't need to break that down. So in the chat box, how many hours were actually paid for our staff? How many was our total actual hours? Probably need to scroll up a bit here. 12,000. Excellent, Sinead. Okay, so 12,000 hours. And what was our standard rate per hour? The 12 again. Excellent. So we'll multiply that by 12. Okay, and that gives us 144,000. Actual hours paid, again, that's 12,000. We don't know the actual rate per hour, but we don't need to because we've been given the actual labour cost, which is 136,800. So, actual times actual is our actual, what did happen, compared to what should have happened. Is this going to be a favourable or an adverse variance? Excellent, yes. So it's a rate variance. So we're talking about expenditure, what we've actually spent. So what we should have spent is 144,000, but we've only spent 136,800. Our costs are lower, which is good news for our profit because it will increase our profit. So the difference between the two is 7,200 favourable. Okay, so writing out these words should and did and thinking about whether it is a cost or whether it is revenue is important, okay, to try and then work out whether it is favourable or adverse. Okay, now in terms of labour efficiency, this time we're looking at hours. Okay, if it's efficiency, you're looking at the quantity variance, which for labour is in terms of hours. So we're saying, well, we've produced these units, these batches, how long should it have taken us to make them? How long did it take us to make them? And at that point, we decide whether it's favourable or adverse. We then multiply by the standard rate per hour, because if we go back to that slide that I was showing you, we just change one thing at a time. So we've changed the quantity, so the price remains the same at the standard rate. Okay. So in terms of labour efficiency, we want to take our actual units multiplied by our standard hours per unit compared to our actual units multiplied by our actual hours per unit. Okay, so this is what we should have done because it's got the word standard in it. Remember, standard means should. And this is what we did do because all of the words are associated with actual. Actual means what we did achieve. So our actual batches are our 12,000 batches. We want standard hours per unit, which is this bit, okay, half an hour. So this is why it's important to highlight things or to write them down so that when you come to calculate your variance, you can easily locate the information as you need it. So we go and put in multiplied by half an hour, which at the minute we're working in hours. So this is 10,250 hours. We've not multiplied anything by a monetary value. Actual units multiplied by actual hours per unit is just what we actually took to make these batches, which in the question was our 12,000 hours. Okay, so it's at this point you work out whether it is adverse or favourable because you're looking at efficiency, you're looking at quantity, you're looking at hours. So is this variance going to be favourable or adverse? Excellent. Good. Fantastic work. So yeah, again, look at the word should, look at the word did. What we should have spent is 10,250, but we spent longer. Well, if we spend longer, that means we're going to have more cost, which is not good for our profit, and therefore it is adverse. So the difference between the two is 1,750 hours adverse, but variances always need a monetary value because we want to work out the effect on our profit. So what we do is we multiply by the standard rate per hour. Okay, now our standard rate per hour was our $12. So 1,750 multiplied by 12 gives us our final variance, which is 21,000 adverse. Okay, so let me just put these green ticks down at the moment. So show of hands or green tick, has that helped with some advice as to where to find the information quickly and then how to use it? So as I said, keep writing these things out because it will help you to then think about where that information is. Brilliant, fantastic. So I'm not going to go through any CIMA P1 questions because I know there's not many CIMA students on today's webinar, but hopefully those questions would be exactly the same if they were in a CIMA question as well. So what I'm going to quickly do is just go back to my slides and talk about backward variances, because sometimes people said at the beginning that they weren't sure what they were being asked to actually do, and this might be something around it being a backward variance question rather than just a straightforward calculate the variance. So with backward variances then, this is where you might be asked in the question for something that you want to calculate, okay, but it isn't a variance that you're calculating. So the approach to a question like this, where you're being asked something slightly different, is for any variances that are mentioned in the question and in the scenario, write out the pro forma, okay, so write out the pro forma in terms of, you know, it's actual multiplied by standard, you know, and so on. Write out the pro forma, okay, on your scratch pad or, you know, on your workings paper. Using the scenario, fill in any bits of information within that pro forma that you've been given in the question. Once you've got it all written down, you will then be able to visually see what you then need to do, taking it one step at a time in order to get to the information that you're being asked for in the question, okay? So write out the pro forma, fill in what you know, what you've been given in the question, and then you can look at it and visually think about what you need to do. So let's just have a look at a quick question like this one, okay? So this is going to be a CIMA P1 question, okay? So here's a question. KK Company has an adverse idle time variance of 12,000. The standard labour rate is 4. The actual hours worked were 11,000. How many hours were paid for? So this isn't a variance where it says calculate the variance. It's asking for how many hours were paid for. But ignore what it's asking for at the moment. A variance has been mentioned. So if a variance has been mentioned, first thing that you should do is write out the pro forma. So the idle time variance compares the hours that you have paid compared to the hours that you worked, okay? If there's a difference, it means your staff have been standing around doing nothing for a period of time, which is not good news for your profit because you're paying them for not producing you anything that is going to earn you any money. So hours paid compared to hours worked, okay, and then we work out the variance and we multiply by the standard rate per hour, okay. So let's fill in what we know from the question. So we've been given the variance, so we know the answer to the variance is 12,000 adverse, okay. So that's that bit of information. Oh, disappeared again. There we go. That's that bit of information being used. The standard labour rate is $4 per hour. So I'm going to put in 4 because we've been given that information. Fantastic. Tick that off. The actual hours worked were 11,000 hours. Okay. So what the question is actually asking for is the hours that were paid. Okay. So what we're going to do is we're going to start at the bottom and we're going to work backwards, okay, in order to find that hours paid. So the first thing that we need to find is the variance in hours, okay. So if something multiplied by 4 equals 12,000, we need to rearrange the equation, so we divide both sides by 4. So the something would be 3,000. Okay, so the answer to this part is 3,000 hours adverse. So if the hours worked were 11,000 and it's 3,000 hours adverse, i.e. we've been paying them for not producing anything, how many hours have we actually paid them for? Excellent. 14,000 hours, because we must have paid them for hours where they weren't working because it's adverse and therefore it must be higher, so we add on the 3,000 hours. Okay, so that really brings us to the end of the session. So we've walked through some variances, we've understood where they've come from, we've looked also at backwards variances. I'm 3 minutes over time. I do apologise. No problem, Andrea. So hopefully that has helped, or at least given you some starting points to think about how you can improve sort of your knowledge of your variances. Okay, so if you've got any questions at all, my email address is on the screen, but I'm also just going to bring up this poll here to ask you what you think about variances now. Do you feel any more confident, okay, than you did at the beginning of the session? And also there is a poll at the bottom in order to tell me how you found the session as well, okay? Excellent. Now, I'd love to spend all afternoon talking about variances and doing variance questions, but hopefully that has helped you to at least understand the variances more, which hopefully should help you to be able to calculate them. I've also put in some useful links here as well. So if you are interested in studying a PM course with us or a CIMA course with us, then there are courses that are starting in June and July. You can find all of our dates and prices on the website, and also we've got some offers called ACCA Unlimited and CIMA Unlimited. So I'll pop the links in there as well, should you wish to take a look at them. Okay. Fabulous. Well, thank you very much for giving up the sunshine to come and listen to me talking about variances. Thank you for interacting. Always makes it a more interesting session. I will send out the recording and the slides and the various Proforma to you all very shortly. And I wish you a very good afternoon and good evening. And obviously I will keep my fingers crossed for those of you taking your PM exams in July. Okay, if you need any help, just drop me an email, or any advice, just drop me an email. It's been lovely talking to you all, and I'm going to say goodbye. If you would like to exit the session, you can go to meeting exit, or you can just click on the cross in the top right hand corner of your screen. Okay, you take care, everybody. Stay healthy, stay safe, and I'll speak to you soon. Bye for now.